And pretty much markets around the world are down today as tensions between the U.S. and Europe escalate. Our next guest says it's impossible to know whether this downturn will be a blip or the start of a trend. Joining us now is Benjamin Klein, Senior Portfolio Manager at Baskin Wealth Management. Benjamin, thanks very much for joining us.
Thanks for having me.
So the crystal ball is not working right now, is it?
I don't think even the most powerful crystal ball could know what's going to happen here. I mean, we've seen strong rhetoric, and the plans backed off sooner than we expect, and we've seen plans that last days, weeks, and months. I don't think anyone can really know, and frankly, I think even if you did, knowing exactly what the impacts are going to be on the global economy and the geopolitical climate is even a lot harder than that. So,
what are some of the signs you're looking for, though, that might indicate we're going one way or another?
So if you ask the bond market thinks that the Trump is likely to back off the rhetoric, that, as we've seen from the move on the 10-year. But I think, frankly, we know that one of the only things that all investors hate is uncertainty. And I think that's a big reason why you're seeing, I looked over to my other screen, I'm seeing a lot of red on it, and I think that's a big reason why.
And looking at stocks and which way to go with it, what kind of an impact is it having on Canadian defense stocks? There's been a surge. We've seen a good bounce. Is this fueling it?
I think likely. I mean, if there's going to be shifts away from spending on the U.S. and if there's less appetite for spending, particularly on U.S. defense, it could be material for Canada. We think the major benefit is that it would allow Canadian defense manufacturers, for example, Bombardier, to increase output without requiring significant investment on their part. How material would this be? I think far too early to know, but entirely possible. This is a significant positive for them.
And any other companies in a similar situation for them? To them?
So I mean, we're also seeing gold. Gold is up again today. Could be good for them. Safe haven asset. More geopolitical uncertainty. I think worth noting, at least from our perspective, going into gold now after the huge run it had last year and leading into 2025, I think you're kind of making a bet on even more geopolitical uncertainty, and I hope that's not what happens, but who knows?
And I mean, I think what makes this so difficult is we keep hearing buy the dip, or we keep seeing a drop. Some people think that's the start of it, and yet it keeps going, and so nobody knows how to make a decision one way or the other. It almost leaves people paralyzed. But with so many other people paralyzed, are there opportunities in that?
We think so, and particularly with the year that we saw in 2025, when 2025 was not a year when the rising tide lifted all ships, so to speak. It was a very very bifurcated market, the haves and the have-nots. We think there are quite a few really attractive opportunities to buy for long-term value-focused investors. So despite everything, we think there are places to put new capital.
And you've got a couple of stock picks here. Let's get to them. TransDigm Group, TransDigm Group. TransDigm Group. TransDigm. Oh, we're missing an S in there. Okay, TransDigm. What are you liking about that?
Yeah, so they're mostly an OEM manufacturer of aerospace and aircraft components. They're also, one thing that we like about them is in the last couple months they've made 2 acquisitions on the PMA parts. So this is other kinds of approved but cheaper replacement parts for aircraft. We think that it's overall just a really well-run company, consistently very strong capital allocators, doing a good job acquiring companies, not paying too much, incorporating them into their business, improving margins, those kinds of things. Very strong free cash flow generator, expecting to make something like $2.5 billion in free cash flow this year. And they're seeing healthy organic growth and year-over-year improvement in really all of their major sectors, including defense. And also worth noting, this is a company where there was a lot of kind of skepticism. They had a rough patch in 2025, seems to have recovered, and the narrative seems to have shifted a bit. So we're hopeful that portends well for the future.
Okay, and Taiwan Semiconductor, there's not much not to love about this one.
No, I think we don't necessarily disagree a lot from the consensus here, other than this is one of the most important companies on earth. I don't think it's an overstatement to say that. And the valuation is extremely reasonable. You're trading very close to a market multiple for, a company growing at, 20+%, certainly in the near future, and maybe far, far beyond that. They're forecasting 25% compounded annual growth rates going forward through the end of this decade. Obviously, there's an enormous chip shortage, an enormous amount of demand. They're opening, new construction facilities in the U.S. and Taiwan. They've had success in the ones they've already opened in the U.S. Our view is, not overly complicated. This is an amazing business at what's to us is a very cheap valuation.
And no concerns they can't meet that demand?
I mean, they're going to do their best, and part of the reason why it's so attractive is just they have to build as fast as they can, and because they're the most technologically advanced, they're going to dictate the market. So obviously there's concerns that they build new facilities and they don't get them up to speed as quickly, but that's going to limit supply much more than it's going to limit demand. All
right, and Constellation Software just feels like it's being bullied in the schoolyard right now.
Yeah, it's had a rough year, no doubt about it. We think this, frankly, is a generational buying opportunity. I mean, this has been one of the best compounders in the history of the world for decades. And we think really, the concern with Mark Leonard stepping down, he's been working on, transition for years. He's not really the main rainmaker at the firm anymore and hasn't been for a long time. We trust the rest of the team and his succession plan to be able to continue. They've always been creative in terms of, spin-offs and structuring deals differently. We think that they're going to be able to continue making deals at attractive valuations. And then when it comes to the AI story, I think really it fundamentally misunderstands how their business works. These are typically for very small businesses. They need their software to be rock solid and dependable, and no issues with data accuracy, things like that. And that's, for now, not what AI is very good at. So for us to see that the valuation on Constellation Software, it's down close to 50% now, but it's basically pricing in no growth from here, which would, to say the least, be a significant decrease from what they've seen over the last several years and decades. We think this is really unreasonable and a great buying opportunity if you don't own it already.
Okay, we'll wrap it up there with Benjamin. Thanks as always for joining us.
Thank you.
Benjamin Klein is Senior Portfolio Manager at Baskin Wealth Management.